Hello, everyone. This is Miss Renee again. We are officially live and we have amazing conversation today. The conversation is going to be strictly on how do we, as Notary Publics, being self-employed, right, independent contractors, to literally get a mortgage. So what we do as a loan signing agents, for those of you just don't know, so as a loan signing agent, I say is a level two notary. A level two notary is where we execute real estate documents, right? So we're mobile, we go to different homes, we sit on the side of the table, we congratulate everyone for purchasing their first home, we congratulate them for getting a low interest rate on their home or even investment property, selling their property, right? It's a seller's market right now. So we do all of that. But then let's think about it. Let's reverse engineer this. When is it our day? When is it our day? Right? We know how to make the money. We know that it's possible, right? In general, right? But it's okay. We made $5,000. We made $10,000 that month. We made $100,000 for the year. But they say that it's a myth. Well, you can't write off everything, right? You're like, oh, because you're not going to show that you make that much money, right? And Miss Renee brought someone that is amazing, okay? And she's going to tell us a little bit of a notary gem, right? For us, specifically for notaries, right? To make, how is it really possible? So she is one of my wonderful, wonderful interviewers. Her name is Miss Ashlee O'Neill, and she is a loan originator. Tell us a little bit about you, Miss Ashlee.
Hello, everyone. I'm so happy to be here. Thank you so much, Renee, for having me today. As she stated, I am a loan originator. I do work for Nexa Mortgage, which is a brokerage, one of the largest brokerage in the nation, actually. We do work with over 100 different lenders, right? So that means we have options. We have options for W-2 borrowers, clients, and we have options for self-employed, as well as we even have bank statement programs, right? So I just wanted to, when Renee spoke to me and I love her platform and what she does for you guys and dropping the notary gems and things like that for you guys to be able to progress in your career, in your business, things of that nature. I wanted to come on and discuss with you guys how you can get a mortgage, get a home with being self-employed, as well as the bank statement program. So I wanted to tap into that a little bit, just to kind of explain and let you know exactly what a mortgage broker is. Basically, I pretty much will vet you out, see the circumstance, see the scenario, understand what's happening, what your situation is, right? So you're self-employed and you file taxes. There's possibilities that you can actually get a mortgage. You do not just have to be a W-2 9 to 5 client to get a mortgage nowadays, right? Those are called qualified mortgages. Well, guess what, guys? You are able to do a non-QM, which is a non-qualified mortgage program that's available for self-employed borrowers. So I wanted to come, I wanted to talk about it. I wanted to speak to you guys and just let you know that it is a way. Right. So, and just to tap into it a little bit more, bank statement programs, you definitely want to make sure your business is set up, legitly set up, your license, you're in business for at least 2 years, normally 2 years at least, right? With the bank statement programs, I work with so many different lenders that have so many different guidelines and stipulations, but the overview of it, you want to make sure that you have your deposits. You want to make sure your deposits, because technically what they're using or what they're looking at, the lenders, are your deposits. That's your income, right? So you don't want to have a lot of overdraft fees and things of that nature. And this is strictly for the bank statement program. You can literally use your bank statements to qualify for a mortgage. There's different programs. There's a 12-month bank statement program, a 24-month bank statement program. I've even worked with lenders that offer 2 months bank statement programs. So, and how that works is you want to make sure you have the deposits. And what they do is they review your deposits, they review your history, and that's pretty much your income, along with the deductions. You know what I mean? So that's how the bank statement program work. You want to make sure you have enough money and funds in the bank to be able to cover your principal, interest, taxes, and insurance, as well as reserves. So you have to have enough money for reserves as well. Usually, some banks allow anywhere from 3 to 6 months reserves, depending on the loan amount and what you're qualified for, right? So just let me just back it up a little bit. Qualification, yes, it is. We do look at the credit profile, not just a credit score. We look at the actual profile. So some people, someone may have a 700 credit score, but they were late 3 times last year. So even though you have a great credit score, you're actually showing the characteristics of not paying on time, or you're forgetting, or whatever the case may be. Things happen, right? So we look at the entire picture, the entire profile, and that's important. So that describes who you are. I mean, that's literally the beginning of the book. That's the beginning page, right? Your characteristics of your profile. So you want to make sure you're paying things on time, especially when you're ready to go ahead and get a mortgage, because these are loans that's provided by the government and things of that nature. And you want to be able to show that, hey, I'm qualified, I'm responsible, I take accountability, I can do this. I pay my bills on time, I can do this. So when we're talking about the credit, we only look at what's on the actual credit report. And those are your liabilities, which is your debt. And then we look at the income. So it's your debt to income ratio, right? So they would be able to look at that and say, okay, credit score is good. Let's look at the bank statements. Let's look at the deposits. How much money are we bringing in? Are we saving it, or are we overeating? Are we Netflixing and chilling? What are we doing? What are the deductions that are coming out? You don't want to have more deductions coming out compared to what's coming in. You know what I mean? So when you know that you're ready to start purchasing, or you're ready to get the blueprint, ready to go down that road, you want to make sure your situation is in place, and that picture is presentable, it's attractive to lenders. So they say, okay, she's ready, right? Another thing I want to touch on is just with the bank statement programs too, they do come with a little higher interest rate. So right now rates are still historically low, but they are rising day by day. They're definitely rising. Last year around this time, they were extremely lower than where they are right now. So we're looking at, rates anywhere from the high 2s, low 3s right now. Well, that's for the standard qualified mortgages. When you're talking about a non-QM, which a bank statement loan will fall under, and a self-employed borrower, you're looking at higher interest rates. So you're definitely looking at 4s, high 4s, low 5s interest rates. But the key is to make sure you'll be able to get your foot in the door. And guess what, guys? You can always refinance out. You can always refinance to a lower rate as soon as that becomes available. I have some lenders where you can refinance out within, 3 to 6 months. I have some that, yep. I have some lenders, because I work with so many. I work with like literally 150 different lenders, right? So I work with some where you can refinance out, right away. So it all depends on the situation, but the rate is pretty much determined by the credit score. So, you want to make sure that credit score is attractive enough, at least a 620 or higher. I do have some lenders that go below that, but you would definitely be looking for a higher rate. And that's, the interest rate pretty much kind of goes with the actual credit score, if that makes sense.
Okay. So I have a couple questions. So
Sure.
you're saying that as a self-employed, just repeating for those that are just currently watching, right? Or just understanding, because I think that this is just another option for those that, one, have really they wrote off everything, right, on their taxes, right?
Right.
And they're like, okay, I'm never going to be able to get a mortgage, right?
Right.
Because I made 100,000, but on my actual taxes, it looks like I only really made like $20,000 because I was exempt. I deducted nearly everything because we're mobile
Right.
notary, right? So we write off everything. So it's like,
Mhm.
oh my God, I can't. So you're saying that through this program, I don't need to show my taxes to get that pre-approval?
Right. For the bank
Oh, wow.
statement loan program. That
Okay.
is
So for
correct. That
that,
is correct.
so one of the caveats to that
Mhm.
is a higher interest, right?
Absolutely.
Okay. So
Absolutely.
it's a higher interest. But then to offset that is just refinance
Yep.
within the short amount of time.
Yep.
So this is kind
Absolutely.
of a workaround for those that really feel that they had no hope, but then hope has just came, right?
Exactly.
And if they're you have to really talk to the person that is in there for you. And going
Mhm.
to a brokerage like Nexa is
Yep.
really great because what I hear a lot is we just don't fit you in a box.
Right.
We make sure whatever your desires are,
Right.
right, that we can find it for you because how many
Absolutely.
products do you have?
We literally have over 150 lenders that we partner with. So there's options.
Wow.
And it's not like you're going to Bank of America and Bank of America is only providing their one program and that's it. And if you don't fit in that box, I'm sorry, Bank of America can't help you. Well, that's the benefit of working with a broker, especially with a broker that's partnered with over 100 different lenders, for sure. For sure.
Okay. No, that's amazing. So can you
Mhm.
talk a little bit about again, what brokerage are you with? And what is the difference between like just for like a first home buyer? Because we also want to live the American dream.
Right.
As a notary
Mhm.
public loan signing agent, it's like we help people get real estate property, right? But then we don't have it for ourselves, right?
Right.
And if we die, we have nothing to give to our legacy, right?
Right.
And so because of that, one of the things that is so important through this initiative, this campaign that I really want to kind of focus on is because of the fact that what can we do now? So what is the difference? Help educate us. So you're coming, you're a home buyer. Most people just go to their bank, right? They go to Bank of America, they go to Chase and things. What is the difference in what you're doing? Like what is a brokerage and what is a non-brokerage?
So some of the retail banks like Bank of America, Navy Federal, those are the banks that most people are familiar with. They have their normal checking and savings account with these banks, so they already have a relationship with these banks. So they feel like it's easier to just walk in to my local bank because I already have a checkings account and I already have a savings account. Why not, right? So it's almost like you're programmed in a sense to just use what you're normally used to, and you're not really understanding that there's other options out there for you, especially since the pandemic, right? A lot of people have lost their jobs. A lot of things are different nowadays. There's a lot of more bosses, self-employed people than there were before, right? So when you go into the bank, you do have loan officers inside of the bank. Well, they work for the bank, right? So they're licensed under the bank. When you're dealing with a broker, we actually had to go and take a safe test. We have to take a national test, a state exam. So we're independently working for brokers and partnering with lenders, like I that's what I do, and I actually obtain wholesale rates. So when you're going to a specific bank that you're familiar with that may have your checking or savings account, they're only allowed to provide you that program. They're not going to tell you what the bank down the street is doing to lose business, because why would they do that? Navy Federal doesn't know what Bank of America is doing, and they don't know what Chase is doing, right? That's their competition, right?
Wow, say that
So
again. That was a notary Jill. Say that one more time. I think people missed it. Can you say
Navy
it one more time?
Federal Credit Union does not know or care what Bank of America is doing, or even Chase, right? They're only going to provide you their program, their products, and that's it. If you don't fit in their box, they're going to say, "Hey, Renee, or Kim, come back and see me in 8 months. I'll be able to take care of you." They're not going to say, "Go see this broker. She has a lender for you." They're not going to say that, right? It's a business. So when you're working with a broker, think about it like when you're going on a family vacation, or you're getting ready to go out and you're going out of country on a vacation and you want to book with You want to stay at the Hilton. Do you go directly to the Hilton, or are you going to go on Expedia? When you check through Expedia, you're going to be able to check all the local rates, all the hotels and the flight information to get the better rate. That's how a broker operates. So when you're going to a broker is literally understanding your scenario, your situation, and we're literally going back to the lender shopping for you, saying, "Hey, Kimberly has XYZ. I need to get her a loan with this. She hasn't filed taxes, so can we do a bank statement loan?" Okay, yeah, all right. Are there any prepayment penalties? Meaning, if she pays off before the time, is she going to get hit with fees? I need to know your goals. Once I understand your goals, I will be able to go and find you a loan program for you. If you need, I mean, we do, I'm going to be honest, with first time home buyers, we have lenders that take credit scores as low as 500. 500 scores to 579, you're looking at 10% down payment, right? 580 or higher, first time home buyers, you're looking at 3.5% down. With the non-QM, it may be a little bit higher depending on your credit score, depending on where you are. So at the end of the day, it's an asset. You can't lose with an asset. You can't lose with getting your foot in the door and owning something, right? It's just one to many more homes or investment properties for you, creating generational wealth. So don't ever look at it like, oh, I'm stuck in this program. I have a high rate. Where there's a will, there's a way. So get in the property, get in the home. Brokers like myself, we're gonna focus on your goals, and we're gonna be able to put you in a position to refinance out or get in a better position once your foot is in the door. That's the main goal. I can't hear
It's
you.
about getting that foot in the door.
Absolutely.
And that's what I wanted to. Like, even though if notaries don't think that they are in position right now, right? But it's about getting ready, right?
Absolutely.
It's like, okay, I know taxes coming, right?
Mhm.
I know I have X amount of income. What
Yep.
do I do with it, right? We get to a point, and then when we reach that, it's like, okay, I have all this money. What do I do with it, right?
Right.
And this is one of the things that you can prepare for, right? You can
Absolutely.
prepare for generational wealth. You can
Yep.
prepare for getting that big assets and not just
Mhm.
being the executor of the document. You can be
Mhm.
like on the other side of the table and like, it's my day,
It's
right?
my day.
My American
Yes.
dream, right?
Yes.
To get that. And
It's your
so
time.
she is someone that is just experienced in doing this and can really break it down to us to understand it. So one
Yep.
of the questions that a lot of people are asking is, when it comes to personal credit score, what is the personal credit score for a bank statement program? What is that, a non-QM?
So the personal, I mean, they would definitely still look at your credit score, right? But remember, they're looking at your credit score and your entire profile. So they want to see if you have, for example, medical. I can tell you, medical we don't look at, right? So medical, we just disregard that. But they want to look and see, okay, if you have a Capital One card, how many times have you been late? How many times have you been late on your auto payment? How many times, did you co-sign a car for someone? Are they late? Are you an authorized user, or are you a client that's added on someone else's card? So your credit profile, it's not just a score. We're looking at the entire picture. That tells us everything about you and pretty much what has happened in your past. Now, granted, you can clean it up, right? But that's what the credit profile is. It's not just a score, because trust me, I've seen clients with a really good score, but then within the past year they had a lot of lates. They're late on this payment, they're late on that payment. Well, guess what? Lenders want to shy away from that, because if you're telling me you're late on certain payments, what are you going to do with this mortgage, with your principal, interest, taxes, and
Mm,
insurance? You know what I mean? So it's already painting the picture for them. So you definitely want to make sure
mm.
you're in a position where it's attractive enough to move forward. And that's why some of these bank statement programs are great, because, like I said, I have some programs that work with 12 and 24-month bank statements. You can literally kind of figure out where you are, have your credit, situated where it's like, okay, from six months from now, I'm ready. Maybe you're not ready right now. Is never a no. It's always not now. So even if it's not now, let's get in gear. Let's get prepared to get there. You know what I mean? That's the main goal, and that's what we want to do. It's here for us. The money is here for us. The loan programs are here for us. We got to get out of our own way get in position to get it. You know what I mean? So definitely that's why it's good to stay connected with Renee and things of that nature. You want to make sure you have a good accountant, CPA, so, if your CPA, your accountant's not saying, hey, what are your goals this year? Then maybe you should second guess who's, doing your tax returns. They need to know what your goals are so they can start putting you in position. You can't write everything off and then you go to the lender and you say, hey, I want a mortgage. Well, you can't afford a mortgage. You just took a whole loss. So you got to keep that in mind. Get with the right people, get with the right professionals to put you in position, get you in gear and ready to execute. That's what we're doing. That's what we're doing this year. We're going into 2022 and we're executing. That's what we're doing.
Excellent, excellent. I love it. I love it. So, this is just amazing. We have a couple questions coming in, and one
Sure.
of the question was utilization should be under 10%, correct?
So with
What
the
is
credit,
that? For those people that don't even know what utilization is, what is that?
so with the credit utilization, so I'm not a credit expert, right? So I want to put that out there. Usually you want to have it below 30%. However, it is, 10 to 15% is kind of like a sweet spot. It's like perfect. It's like not overdoing it, but I'm maintaining it. It's great. But you definitely, 10% is actually a sweet spot, honestly. 10 to 15%. But technically, with the creditors, you definitely want to keep it below 30% for sure. And you want to make sure again, I'm not a credit expert, but you want to make sure I do have my own, credit, things like that. But you want to make sure you know the difference between your statement date and your due date, right? Because they report differently. So just make sure if you could get it set up on auto pay, that's great. So you won't, set it, forget it. It's up, it's stuck, it's done. You know what I mean? You're on task. But we just got to start being a little bit more responsible and just taking care of our debts and liabilities so we could obtain this goal. That's key. So we can get the
No,
keys.
this is amazing. So I just wanted kind of to talk to other people if they want to have this conversation with you, right?
Mhm.
And they're interested in like, okay, I want to prepare. Like I'm really more interested in this bank statement program. I want to learn a little bit more. And I just really want to kind of sit with you, talk to you. Um, because you're located in Florida, does that mean that you can't help me if I'm in California?
No, so just to let you know, my brokerage is actually licensed in 48 states. That's the brokerage that I'm with. I'm personally licensed. I am located in South Florida. I'm personally licensed in 7 states. So I'm licensed in California, Florida,
Mm.
Texas, North Carolina, Georgia, Iowa, and Arizona. So if you're looking to purchase in those places, definitely call me. Even if you're not, you can still call me. I'm approachable. I'm transparent. You know what I mean? I'm passionate about what I do, and I want to be able to help you guys obtain this goal. So if I can't, if I'm not licensed in that state, that's fine. I will connect you with a partner that will be happy to assist you. And I literally only work with like-kind individuals. So we have to align with each other on a deeper level to even be able to service my clients. So definitely call me, text me if you have any questions. I'm open, I'm available. You can email me and I'll be more than happy to help you guys and set you up, get you the information that you need.
Oh, sorry. Okay, no, definitely. So we're getting a lot of thank you so much. We're
My
getting a
pleasure.
lot of
My
good
pleasure.
information for this. We're getting a lot of awesome
Oh,
information. People are loving this. It's getting ready for the gym. So I thank you so much for just coming on to really open our eyes as a business owner, right? Because a lot
right.
of people think that being a notary public is just go, 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 mobile, 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 make the money, make the money. But then when you make the money, what do you do with the money? How
Yeah.
do you prepare yourself, right?
Mhm.
Like who talks about personal credit,
Right.
right? Who talks about the bank statement program and
Right.
the possibility of getting approved through just your bank statements, right?
Right.
Who talks about, okay, next level assets, let's refinance. We know the terminology as a loan signing agent. Refi, fee, that makes us money, right? But how about you refinance your own mortgage, right? And
Absolutely.
let's talk about that. That's next level of
Absolutely.
notary,
Yeah.
right? So I thank you so much for coming on. Do you have any last words that if somebody in your position could have told someone maybe 5 years ago what you know now, what would you leave us with?
Well, I first want to say again, thank you for having me, Renee. Okay. I definitely want to say that. And thank you guys. I see the messages here and there. I wasn't looking at it before. I'm sorry. I was just talking. I just zoned out and started talking. But I appreciate you guys. Definitely stay connected. Even again, I'm open. If you have any questions, I'll be able to help you. Ask me. But I do want to tell you, it's your time. It's if you're here right now, tuned in, and you're trying to figure out when it's the right time, it's time now. The time is now, right? You don't want to wait. Rates are really low. Rates are good, but it's just not about rates, right? It's always good to just speak to a broker or a lender just to see where you are so we can get the game plan together. We can work on the blueprint so you can get there. If you hold yourself back due to fear, because guys, keep in mind, it's one of the largest transactions of our lives, right? So I get it. It's intimidating. You know what I mean? So that's why you want to do your due diligence, do your research. But definitely when you connect with the broker or lender now, like myself, you'll know exactly where you are and what you need to do to execute. And 2022 is literally right around the corner, right? It's holiday season right now. Literally Halloween's here, but we it's time to execute, and that's really what I want to do. I want to motivate more people. I want to see more families get into homes this year. It's your time to get your assets and to leverage, get your foot in the door, get out of your own way, and let's do this. Let's do this. It's here. Let's do this. Just start talking to the right people and let's do it.
I love that. I love that so much of what you said. You said start working on your blueprint, get your asset and leverage. I think that
Absolutely.
is the conclusion of Mortgages for Notary. We are so grateful to have you come on to our show and just really talk to us, educate us, get our minds rolling to what is next. And you did a beautiful job and
Oh, thank
short
you.
and sweet, and it was beautiful and amazing. So
Thank
thank you
you.
so much.
I hope this is not my last time here. I would love to continue to speak.
Absolutely. Absolutely not. Absolutely. I'm getting back channeled a lot. Oh my God, it was so wonderful. So I really appreciate that. So
Thank you.
lastly, I'll just keep it on the screen real quick and then I'll end the broadcast. Bye, you guys, and I'll see you next
Bye. Thank you
Thursday.
guys. Much success. Good luck to you guys. And I hope to be speaking to you guys soon.